The checkbook is out for Christmas. At the top of just about everyone's seasonal gift wish list is economic recovery. The Bank of England agreeing to spend an extra £25 billion in quantitative easing, hoping that banks play Santa and start offering more credit. The so-called QE scheme has seen £175 billion injected into the economy so far, buying assets and bonds from banks and companies to help boost lending. Their decision to carry on spending comes as the Monetary Policy Committee hold interest rates at 0.5% for an eighth consecutive month. Boosting the economy needs consumers to start spending, and with little to no room to manoeuvre with the rate of borrowing almost at zero, QE the preferred economic tool. Flooding the market with brand new cash, the aim to boost businesses' bottom line as consumers take up loans, mortgages and credit cards. But is it working? With the UK economy still stagnant as others around the world see growth, economist James Shugg from Westpac Bank says results have yet to be seen.
Well, when the banks become more confident that the economy is something that they want to be lending into, rather than putting those funds back into the Bank of England, they'll get out there and lend it to households and businesses and so on. But they're not really doing that at the moment. I mean, consumer credit, for example, is actually declining. We've never seen that before in the UK economy. But I've got to say, there is some good news starting to come through on the economy. Yes, it shrank in the third quarter, but the business surveys are more positive for the fourth quarter. Consumer confidence is picking up, and the weaker pound is actually going to help the manufacturing sector turn the corner. So it may be, given those more confident signs that are coming through, that the banks will start to use those funds to actually lend, which is what they should be doing.
For those hopeful of a bright Christmas, it seems there are no presents this year. Unwrapping any potential economic growth will have to wait until January. The risk, though, is that quantitative easing could prolong the recovery, results seen in Japan when they employed the scheme in the 1990s, or lead to soaring inflation as too much money hits the financial markets. The good news so far is that the pound rose after the decision was announced, and if it remains an attractive proposition for foreign investment, then the festive season may hold some joy after all.